Introduction. Setting the stage. By 2030, artificial intelligence is projected to contribute over $15.7 trillion to the global economy, with NVIDIA's technology powering a significant portion of that growth. This staggering forecast underscores the transformative potential of AI, and positions NVIDIA Corporation at the epicenter of this technological revolution. NVIDIA has emerged as the undisputed leader in accelerated computing, its GPUs becoming the de facto standard for AI training, inference, and high-performance computing. This analysis aims to dissect NVIDIA's latest earnings release, scrutinize the subsequent conference call, evaluate key financial ratios, and ultimately, assess the company's future horizons in the rapidly evolving AI landscape. Prior to the earnings release, the market held high expectations for NVIDIA, anticipating continued robust growth driven by sustained demand for its data center solutions and positive momentum in its gaming segment. However, concerns lingered regarding potential supply chain constraints and intensifying competition in the AI chip market. 2. Earnings Release Deep Dive, Numbers and Narratives. NVIDIA's Q4 FY25, fiscal year 2025, ending January 2025. Earnings release provided a comprehensive snapshot of the company's financial performance and strategic direction. This section analyzes the headline numbers, segment performance, and key growth catalysts that shaped NVIDIA's results. Headline numbers. NVIDIA reported the following key financial figures for Q4 FY25. 1. Revenue, $39.33 billion. 2. EPS, earnings per share, 89 cents, adjusted. 3. Gross margin, 73.5%, adjusted. Comparison with expectations. The reported revenue of $39.33 billion significantly exceeded analyst expectations of $38.16 billion. Similarly, the adjusted EPS of 89 cents surpassed the consensus estimate of 85 cents. B. Segment performance. The earnings release highlighted the performance of the data center segment, alongside other key segments. 1. Data center, $35.6 billion. 2. Gaming. While specific gaming revenue was not detailed in the release, the gaming division continues to be a very strong and reliable segment of NVDA's business. 3. Automotive and others. While automotive and other segments represent a smaller portion of revenue, they are key sectors for NVDA's growth. Analysis by segment. 1. Data center. The data center segment's revenue of $35.6 billion surpassed expectations. 1. This segment continues to be the primary growth engine for NVIDIA, fueled by unrelenting demand for AI infrastructure. 2. Gaming. The gaming segment remains an important contributor to NVIDIA's overall revenue. 2. While overshadowed by the data center's explosive growth, the gaming division provides stability and diversification. 3. Automotive. NVDA's automotive segment continues to provide steady growth. Data center focus. The data center segment's exceptional performance underscores NVIDIA's dominance in the AI space. The exponential growth in demand for AI training and inference workloads has propelled the data center segment to new heights. See key growth catalysts. Several factors contributed to NVIDIA's outstanding performance in Q4 FY25. 1. AI boom. CEO Jensen Huang has stated that the demand for AI is exceeding the company's ability to supply it. 2. Blackwell GPU. The Blackwell GPU is expected to continue to be a large growth catalyst for NVDA. 3. Supply constraints. NVIDIA's ability to meet the overwhelming demand for its products is currently limited by supply constraints, particularly in accessing advanced manufacturing capacity for its high-end GPUs. 3. The text from the Seeking Alpha analyst stated, "The only thing that's holding it down is just the ability to make the chips. They're selling literally everything they can." 3. Conference call analysis, insights and forward guidance. NVIDIA's Q4 FY25 conference call provided valuable insights into the company's performance, strategic priorities, and future outlook. This section analyzes the key takeaways from management's prepared remarks, examines the analyst Q&A session, and evaluates the company's forward guidance. Key takeaways from management. During the conference call, NVIDIA's CEO, Jensen Huang, and CFO, Colette Kress, emphasized several key themes. 1. Unprecedented demand for AI compute. As stated by CEO Jensen Huang, demand for Blackwell is amazing as reasoning AI adds another scaling law. Increasing compute for training makes models smarter, and increasing compute for long thinking makes the answer smarter. 1. This highlights the continuing and increasing demand for AI solutions, and NVIDIA's ability to provide those solutions. 2. Blackwell GPU ramp. CFO Colette Kress noted NVIDIA delivered $11.0 billion of Blackwell architecture revenue in the fourth quarter of fiscal 2025, the fastest product ramp in the company's history. 2. This rapid adoption underscores the market's eagerness for NVIDIA's latest technology. 3. Strategic initiatives. NVIDIA continues to expand its AI cloud offerings to enhance enterprise AI adoption, and is integrating its Drive AGX, or an AI platform, into next-generation autonomous vehicles, reinforcing its position in the automotive AI sector. These statements underscore NVIDIA's confidence in its ability to capitalize on the AI boom, fueled by robust demand for its cutting-edge AI solutions. The Analyst Q&A highlights. The Analyst Q&A session revealed several recurring themes and concerns. 1. Future growth. Analysts probed management on the sustainability of NVIDIA's growth trajectory, given rising competition and potential market saturation. 1. While NVIDIA's dominance in the AI space is clear, analysts question the company's ability to maintain its current growth rate in the face of intensifying competition and potential shifts in the AI landscape. 2. Competition. Analysts questioned NVIDIA's strategy for maintaining its competitive edge in the face of increasing competition. 2. Specifically, analysts inquired about the competitive threat posed by AMD's MI300 series and the potential impact on NVIDIA's market share. 3. Supply chain strategy. Analysts questioned NVIDIA about its strategy for scaling production to meet the overwhelming demand for Blackwell GPUs. 3. Management emphasized its close collaboration with key manufacturing partners and its investments in expanding capacity to address these challenges. See forward guidance and market expectations. NVIDIA provided the following forward guidance for Q1 FY26. 1. Revenue. Projected at $43 billion, plus or minus 2%. Surpassing analyst expectations of $42.1 billion. 2. Gross margins. NVIDIA expects gross margins to improve later in the year due to increased efficiencies and a favorable product mix, despite near-term pressures from production ramp-up and tariffs. The market reacted positively to the forward guidance, with NVIDIA's stock price increasing in after-hours trading. This positive reaction reflects investors' confidence in NVIDIA's ability to sustain its growth momentum and capitalize on the long-term AI opportunity. 4. Financial ratio analysis, unveiling the underlying strength. This section delves into NVIDIA's key financial ratios to assess its financial health, growth potential, and risk profile. By comparing these ratios to industry averages and considering NVIDIA's unique business model, we gain a deeper understanding of its investment attractiveness. Key ratios and their significance. 1. Price to earnings, PE, ratio. NVIDIA's PE ratio, TTM, is approximately 44.65. Significance. The PE ratio measures the market's valuation of a company relative to its earnings. A PE ratio of 44.65 suggests that investors have high expectations for NVIDIA's future earnings growth, reflecting its leadership in the high-growth AI market. 2. Gross margin. NVIDIA's gross margin is 73%. Calculated as gross profit, revenue equals $28,723, $39,331. Significance. Gross margin reflects a company's profitability after deducting the cost of goods sold. A gross margin of 73.0% indicates strong profitability and pricing power, driven by NVIDIA's differentiated technology and strong demand. 3. Return on equity, ROE. NVIDIA's ROE is approximately 27.8%. Calculated as net income, shareholders' equity equals $22,091, $79,327. Significance. ROE measures how effectively a company is using its shareholders' equity to generate profits. An ROE of 27.8% indicates strong profitability and efficient use of shareholder capital. 4. Debt to equity, DE, ratio. NVIDIA's DE ratio is approximately 0.41. Calculated as total liabilities, shareholders' equity equals $32,274, $79,327. Significance. The DE ratio measures the proportion of a company's financing that comes from debt versus equity. A DE ratio of 0.41 suggests a conservative financial structure, with relatively low leverage, indicating lower financial risk. 5. Cash ratio. NVIDIA's cash ratio is approximately 2.4. Calculated as cash, cash equivalents, and marketable securities. Total current liabilities equals $43,210, $18,047. Significance. The cash ratio measures a company's ability to pay off its short-term liabilities with its most liquid assets. A cash ratio of 2.4 indicates excellent liquidity and a strong ability to meet short-term obligations. B. Comparative analysis. Trends and anomalies. 1. NVIDIA's PE ratio of 44.65 is significantly lower than AMD's PE ratio of 169.7, which implies investors are paying far less for each dollar of NVIDIA's earnings. 1. The high PE for AMD suggests that the market has exceptionally high expectations for its future earnings growth. 2. NVIDIA's gross margin of 73.0% significantly exceeds both the industry average of 32.73% and AMD's gross margin of 51%, reflecting its differentiated technology and pricing power. 3. NVIDIA's ROE of 27.8% is much higher than AMD's negative ROE, minus 13.9%, and the industry average of 5.6%. Demonstrating its strong profitability and efficient use of shareholder capital compared to its peer group. 4. NVIDIA's DE ratio of 0.41 is far lower than AMD's DE ratio of 39.9%, and the industry average of 1.11, indicating a very conservative financial structure with low leverage. 5. NVIDIA has very strong market share. See implications for investors. 1. Based on the financial ratio analysis, NVIDIA exhibits superior profitability, efficient use of capital, a conservative financial structure, and excellent liquidity compared to AMD. 2. Investors should consider NVIDIA's strong financial performance and dominant position in the AI market when evaluating its investment attractiveness. 3. NVIDIA's dominance relative to AMD should be an important point of consideration. While potential risks such as competition and supply chain constraints exist, NVIDIA's financial strength and strategic positioning suggest it is well equipped to navigate these challenges. With a strong cash position, NVDA should be able to continue to repurchase stock or make strategic acquisitions. V. The AI revolution and NVIDIA's future. This section explores the broader AI landscape, analyzes NVIDIA's position within the AI ecosystem, discusses potential risks and challenges, presents a long-term outlook and investment thesis for NVIDIA, and touches on ethical considerations. A. The broader AI landscape. The AI market is experiencing exponential growth, driven by advancements in deep learning, natural language processing, and computer vision. According to Precedence Research, the AI market size is projected to expand from approximately $757.58 billion in 2025 to around $3,680.47 billion by 2034, reflecting a compound annual growth rate, CAGR, of 19.20% during this period. However, it's important to note that other sources offer potentially more aggressive growth estimates, with some projecting a market size exceeding $4 trillion by 2030. Investors should consult multiple sources for a comprehensive view. This growth is fueled by increasing adoption of AI across various industries, including healthcare, finance, automotive, and manufacturing. PwC's Global Artificial Intelligence Study estimates that AI could contribute up to $15.7 trillion to the global economy by 2030, driven by increased productivity and consumption side effects, PwC.com. NVIDIA is strategically positioned to capitalize on this growth due to its early investments in AI-specific hardware and software solutions. NVIDIA pioneers accelerated computing and is now a full-stack computing infrastructure company with data center scale offerings that are reshaping the industry. The full stack includes the foundational CUDA programming model that runs on all NVIDIA GPUs, as well as hundreds of domain-specific software libraries, software development kits, or SDKs, and application programming interfaces, or APIs. Competition includes AMD and Intel, as well as smaller specialized chipmakers like Cerebras Systems and Graphcore, and custom AI chip developers like Google, Amazon, and Meta, simply Wall.st. NVIDIA has a strategic advantage because it is a full-stack company. B. Potential risks and challenges. Despite its strong position, NVIDIA faces several potential risks and challenges. Competition. Increasing competition from AMD, Intel, custom AI chip developers, and specialized chipmakers could erode NVIDIA's market share and pricing power, simply Wall.st. AMD has recently launched its MI300 series of AI accelerators, which pose a direct challenge to NVIDIA's dominance in the data center market. Supply chain issues. Disruptions in the global supply chain and reliance on third-party manufacturers could impact NVIDIA's ability to meet demand for its products, Gothamatic.com. NVIDIA is actively working to diversify its supply chain and secure long-term agreements with key suppliers to mitigate this risk. Regulatory changes, antitrust investigations, and potential regulations, especially concerning AI and chip manufacturing, could affect NVIDIA's operations and market strategies, Mumu.com. Geopolitical tensions. Trade relations, particularly between the US and China, may influence NVIDIA's supply chain and market access, posing risks to its global operations, BusinessInsider.com. Emerging competition. Innovations from competitors offering alternative AI solutions, with less reliance on NVIDIA's hardware, could erode its market share, BusinessInsider.com. NVIDIA is addressing these challenges by investing in research and development, diversifying its supply chain, and engaging with policymakers to shape responsible AI regulations. In the company's recent earnings release, management emphasized its commitment to innovation and its proactive approach to managing potential risks. See long-term outlook and investment thesis. The long-term outlook for NVIDIA remains positive, driven by the continued growth of the AI market and the company's strong competitive advantages. The key investment thesis for NVIDIA is based on its dominant position in the AI chip market, advanced GPU technology, CUDA software platform, comprehensive AI solutions, strategic partnerships and market presence. Possible future catalysts for growth include continued AI adoption. Demand for NVIDIA's products will likely continue to grow as AI becomes more deeply integrated into various industries. Product innovation. Ongoing development of cutting-edge technologies, such as the Blackwell AI chips, positions NVIDIA at the forefront of AI hardware advancements. Strategic partnerships. Collaborations with leading tech firms and participation in large-scale AI infrastructure projects enhance NVIDIA's market presence and revenue streams. Expansion into new markets. Venturing into emerging sectors like automotive AI, edge computing, and IoT diversifies NVIDIA's portfolio and opens new revenue opportunities. Large-scale AI adoptions. De-ethical considerations. As a leading provider of AI technology, NVIDIA has a responsibility to address the ethical considerations surrounding AI development and deployment. NVIDIA is committed to promoting responsible AI development and is actively working to mitigate potential risks such as bias, privacy violations, and job displacement. This includes promoting fairness, transparency, and accountability in AI systems, and engaging in discussions with policymakers and industry partners to shape ethical AI guidelines. Conclusion. Summarizing key insights and looking ahead. In conclusion, NVIDIA's Q4 FY25 earnings release and subsequent analysis paint a picture of a company at the forefront of the AI revolution. The company's strong financial performance, driven by robust demand for its AI solutions, underscores its pivotal role in this transformative technology. NVIDIA's strategic investments in both hardware and software, particularly its CUDA platform, have created a competitive moat that is difficult for competitors to breach. The financial ratio analysis reveals NVIDIA's exceptional profitability, efficient use of capital, and conservative financial structure, positioning it favorably compared to both industry averages and key competitors like AMD. While challenges such as competition, supply chain complexities, regulatory scrutiny, and ethical considerations remain, NVIDIA's proactive approach to innovation and risk management suggests it is well equipped to navigate these hurdles. For investors, this translates to a company with strong fundamentals and a clear growth trajectory in a rapidly expanding market. Looking ahead, NVIDIA's long-term prospects appear bright, fueled by the continued expansion of the AI market and the company's ability to capitalize on emerging opportunities in areas such as automotive AI, edge computing, and AI agents. NVIDIA's position as a full-stack computing infrastructure company, combined with its strong financial foundation, positions it for continued success in the years to come. Given its dominant position, robust growth prospects, and strong financial health, NVIDIA continues to be an attractive long-term investment for investors seeking exposure to the AI revolution. Investors should weigh the identified risks against the potential rewards and conduct thorough due diligence before making any investment decisions. Disclaimer: the financial analysis presented here is based on information available as of February 27, 2025, and should not be construed as financial advice. It is recommended to consult with a financial professional before making any investment decisions.